Wow. Okay, everybody, it is me, Gregory Mannarino. This is my post-market wrap-up. What a day. Oh, do we have a lot to talk about here. So yeah, post-market wrap-up on this Thursday, September 23rd, 2021. People, a screaming rally on Wall Street. Now, what would you expect to happen, really, when this morning we got not one, but two rounds of absolutely horrible economic news? Now, this is interesting. Let's put this together. We just heard from the Fed yesterday, and right out of the mouth of the thing known as Yellowstone, Chair Jay Powell, he said the Fed has no definite plans to taper. Okay, none. So, as long as the bad economic news keeps coming, the market's going to love it. And that's why you got this rally today in the stock market. It's not going to change. It's something I have explained to you, this phenomenon. I don't know how long now, years, and I told you it would continue. It will not stop. So for the market getting more bad economic news, which is being downplayed, if you can possibly believe that, there's 351,000 more people applying for first-time unemployment benefits. It's being downplayed by the mainstream media as well. It's not so bad. Look, they're nothing but a propaganda machine. They cannot let you know what's really going on. They're all reading a script, period, the end. They're told what to do, what to say. They're puppets. You understand? That's all these people are. They are puppets. And they're meant to puppetize you. And you're not going to let that happen. I'm not going to let that happen to you, period, the end. So, again, it's just too sick. It's so sick to me. But again, I told you this would happen. I told you people all. I said the last time the market dropped like 600 points, I said buy the dip. I told all of you, and I will continue to tell you this. You will buy that dip. Every dip that comes along, not just in the stock market, but every dip in everything. Cryptocurrencies, which did really well today. Gold and silver, okay, took a hit today yet again. Why? The game remains risk on. Something I've been telling you guys and girls for years. You don't want to believe me. Again, you're listening to, look, I get it. There are YouTube channels out here, and I allude to them all the time, with big following, some bigger than mine. Some used to be out here on YouTube, but are not here anymore. And they are pushing the crash narrative, telling people to get out of the market. As a matter of fact, I want you to think about this. The last time this stock market dropped, just several days ago, I had people writing to me, Greg, I just sold all my stocks. Greg, you're wrong. I just sold all my stocks. I told all of you, this is fear. Okay, these YouTube channels, ex-YouTubers are pushing fear. The moment, the nanosecond that you become afraid is the nanosecond, the moment you lose. You're never going to be afraid. Okay, you're going to sit back, evaluate the situation, and make the correct choices as to what you need to do in this bizarre environment. Okay, turn them off. If you're listening to these people out here, and it's astonishing to me how people can sit back and listen to channels like that, YouTubers like that, ex-YouTubers like that, when they're consistently wrong. They're never right. Look, am I right all the time? No. Nobody is. But am I right most of the time? I mean, a vast majority of the time? How about you guys and girls answer that for me? I won't even say it. Just like I said, ignore these people that are trying to make you fearful of something. If someone's trying to make you afraid of something, there's another agenda going on. They're trying to twist your mind. Me, I just want you to understand how things are, okay? I don't want you to be afraid. And I want you to take in the information that I put out and say, okay, this is going on, that is going on, what do I need to do about it? That's really what it's all about. I told all of you, this environment we are in is so twisted and it's so sick. We're watching the largest wealth transfer in the history of the world occur. I told you again, the well-off, the rich, the super rich, this is the golden age for that group of people, okay? For the middle class, you're being exterminated. You're being eliminated, okay? Now, I've also told all of you for a very long time, you got to choose where you want to go. You want to go up? You want to go down? They're trying to squash you down, and people are falling through those cracks every single day. And the bad economic news will continue as our economy continues to contract, as our debt to GDP ratio hyper balloons, okay? It's that simple. You understand? Anyway, so big rally here on Wall Street. I already covered cryptos here getting a nice bid. I covered what happened today with gold and silver, despite the dollar falling. Crude oil getting bid up as well, over $73 a barrel, going much higher. People, look, some of you are too funny. You really are. You got to understand. Crude oil, again, recently was like at $76 several weeks back, and it dropped down pretty substantially. That was bullish. When an asset like that is in an uptrend, it needs a pullback, okay? That was not a top. I know a lot of you Jim Cramer fans thought Jim nailed it. How about no? He didn't nail dog shit, okay? The man couldn't nail dog shit to a wall if he had instructions. It can't happen. You understand? It's not the top. That was just a bullish pullback, okay? And that's how the market works. You understand? I know a lot of you Jim Cramer fans, I don't know what you're thinking out here, like he's the greatest guy in the history of the world. Look, I got nothing against Jim Cramer. We actually do know some of the same people. But, come on, man. He's a talking head, too. Anyway, if you were to listen to Jim Cramer, he told all of you to sell stocks recently. He said, sell stocks. It was not time to get back into this market. He was totally wrong. You should have never been selling stocks. You need to continue to buy. Now, let's talk about this 10-year yield. It's getting a lot of attention, not just from all of you, and I really like to see that, but from the mainstream media. Today, the 10-year yield did gain 1.419, 1.42. Now, I covered this. If you have just a minute, okay, after you watch this video, go back to Sunday. On Sunday, I explained to you that I would not be surprised to see this week the 10-year yield push the edge of the envelope there with regard to the 10-year yield higher. Well, the 10-year yield went lower, and then today right back up, and now we're banging up against the top of the range. That's really the truth here. But I foretold this to you. Again, watch the video I did Sunday. Markets a look ahead. I explain a lot there. If you haven't seen it, I would urge you right after this, because it'll make sense to you, what I'm going to tell you, because I'm not done. It'll make more sense to you. Okay. So, with regard to, or regarding the 10-year yield, it is absolutely something we need to keep our eye on that. Now, I have also explained to you all, understand what trading is, okay? Trading is taking in a whole lot of information, okay, or investing. Trading, investing, same thing. Taking in a huge amount of information, okay, and trying to put together in a cohesive way, okay. However, there is an art to this at the same time. I mean, this is why, Wall Street institutions pay people like myself exorbitant amounts of money. Okay, I do this for free for all of you. Could I work for a Wall Street bank? Absolutely. Have I been offered positions at Wall Street banks? You all know that's true. I choose not to do that. I want to work for you, and really, that's what I want to do. Anyway, with that said, when you're looking at the 10-year yield like it is right now, pushing up at the top of the range, the next place your eyeballs need to go is the dollar. Okay, there exists a compensatory mechanism between what the 10-year yield is doing and the dollar or the Dixie. You understand? There's actually a formula for this, okay? And it's kind of tricky to interpret. The formula is really kind of easy. And get a pen and paper, and I'm going to tell you. I don't know what that noise was. A little formula here. You should keep, in the back of your mind here or on your desk. You take the 10-year yield, so like 1.42. You multiply that by the Dixie, which is like 93.06. Okay, you multiply these two numbers, and then you divide that number by 1.61. You got it? Okay, and that will give you a number. I think it's around 81. Okay, now that number there is the real key to this entire thing, and this is what I focus on. Okay, that number. Again, I'll say it. 10-year yield multiplied by the Dixie divided by 1.61. You come up with a number there. Okay, that number is the one I really watch. It's more important than just focusing on whatever the 10-year yield is doing. You got to look at the mechanism between the two here. You understand? Okay, now with that said, looking at that number, this is where this becomes somewhat of an art form. And this is why it's very difficult to kind of explain this to you. But at the same time, what we really need to look at, like you can look at that number all day long if you want to. But what we need to watch, again, is a rapid spike in the 10-year yield that doesn't stop. 1.42, 45, 47, 48, 5, 6. That's a big problem. So you could even forget about that number and the ratio I was telling you about if you don't want to, okay? But focus on what I just told you. Or just watch these videos. I will tell all of you when I believe there is a danger zone. And right now, we are still nowhere near a danger zone for the stock market. Okay, I know, like I said, the 10-year yield is pushing up against the top of a range. You got to look at the dollar. Okay, I'll make it even easier for you. I'm going to make this even easier for all of you. Okay, so 10-year yield, dollar. If you see, like today, for example, the 10-year yield rising the way it is and the dollar falling, that compensatory mechanism there is what you want to see. Okay, now, if we have both of these things rising rapidly, again, we have to interpret it in its current environment. But again, that's what we don't want to see. And again, like I said, I will keep you on top of this if you let me do it. Now, before this video gets too freaking long, let me cover a few things with you that's crazy. So again, we got this bad news on the economy. Stocks keep going higher. Now, we also found out, okay, and this is, if this gives you the slightest bit of shock or surprise, I won't believe it. Well, it turns out that inflation, that the Federal Reserve has been pushing the narrative of inflation is transitory, inflation is transitory, inflation is transitory. They've been saying this thing like, I don't know. They're trying to convince us that that's the case. And it turns out, via their own data, it's not true. Inflation keeps creeping up and it's getting monumentally worse. Again, we just heard from CEOs of blue chip companies who are saying this is a big problem and it's structural. But the Fed can't allow you to know that. You have to understand what we're talking about here. When we're talking about the largest criminal organization the world has ever seen, being run by criminals, insider trading, period, the end. They won't get in any trouble, so don't wait for that moment. Don't wait for the arrests like you did last time. Some of you waiting for arrests to happen. You know what I'm talking about? Never happened. It's not going to happen here either. These Fed officials are untouchable. They are the untouchable. So just get used to it. There's them, and then there's us, and they're running the entire show. They can do anything they want at any moment. Okay, period, the end. That's the power that they have right now being given to them by by the government. Well, what used to be the government, now they are the government. You understand? Our representatives don't represent shit. They represent shit, which is them. They don't represent you or me. I think you get that. All right, people, look, a lot of things here. Lots of important stuff going on. I think this is an important video. It's long. I'm going to ask you to please share it. And for those of you, again, who are really concerned about this 10-year yield, don't worry about it. All right, I don't want you to be scared. I don't want you to be fearful. I said we should expect this to happen. Sunday, look at my video from Sunday. As a matter of fact, I'm going to place a link to that video because I want you to watch it in the description of this video. Markets to Look Ahead Sunday Report. That's what it's going to say. Click on it. And I'll tell you what I was expecting to see this week. And actually it is happening. Imagine my surprise. All right, people, look. I really do mean this. I love all of you. Please turn off any of these fear freaking dog shit, cat shit, YouTube blogs, people that used to be on YouTube trying to make you afraid of something because there's an agenda there. The moment you become afraid, that moment is the moment you lose. I will see all of you in the morning.